Hello. Welcome to my channel, my dear friends. My name is ABHILASH, I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. And my dear friends, this is a 15-minute chart of gold in front of us. And as expected, Friday was full of fireworks. Market made a high of almost 337980 and ultimately closed around 337172. And these were the candles formed by gold on Friday. Okay, if you're wondering what was the reason, then you need to know the market sentiment. Dollar sinks at Fed rate cut expectations increase. Dollar tumbles as Powell signal possible September rate cut. Okay, if you don't know, then the main reason of these candles, okay, where Federal Reserve Chairman Jerome Powell, okay, talked about the possibility of a rate cut in the month of September. And whenever there's a rate cut, it is bad for dollar. This is the chart of dollar index. You can see dollar index fell sharply. And this was the main reason why we saw gold flying on Friday. You can see gold jumps after Powell's speech. Gold extends rise after Powell remarks. So this was the main reason because there is a possibility of rate cut in the month of September. Okay. And this is the chart of DXY in front of us. Okay, there was a time when there was a candle by candle correlation between DXY and gold. Nowadays we don't get to see, but whenever there is a sharp move on DXY, we saw immediate response from gold. So on Monday or Tuesday, if DXY continues the downside, if you see after the market opening, dollar index is still under pressure, dollar index is going down, then you can expect the upside on gold to continue because DXY also closed at a very crucial support. Okay, you can see around 97.15. Okay, DXY took support, okay, and ultimately managed to close. But after the market opening, if the downside continues, listen to me carefully, if the downside continues, then gold will continue the upside. So you need to also observe the chart of DXY after the market opening. Okay. And if DXY tries to recover, okay, then we will see retracement on the chart of gold. We need to plan our trades accordingly. Now let's look at the chart of gold. And my dear friends, as we all know, gold is trading in a tight range for quite some time, for many weeks. This is a daily chart of gold, and overall the chart is bullish, but the recent candles are stuck in a range. Okay, nobody knows when gold will be out of the range because to break the range, gold needs to cross 3450, or you can say gold needs to break 3500. If gold breaks 3500 or 3450, then only you can expect that gold will be bullish for the next couple of months. As gold is stuck in a range on day time frame, this is the main reason why we see that there is a trend reversal or trend shift. Okay, after 2-3 days इसीलिए trend बदल जाता है because gold is stuck in a range on a higher time frame, and that's why swing traders are also facing a lot of problem because they are uncertain about the trend of the market. And as long as gold is stuck in this range, the uncertainty, the confusion will remain. There is no solution to it. So the trading opportunities that are in front of us or I'm about to discuss are mostly for day traders only. I'm also a hardcore day trader. Okay, day trading is my forte. So let's discuss them one by one. So this is the 15-minute chart of gold in front of us, and obviously the market opening is going to be very crucial. As we have already discussed, if DXY or dollar index continues the downside, then obviously gold will be showing good amount of upside. If you see dollar index or DXY going below the support of 97.15 or 97, then obviously you can continue with your buy position on gold. If you have a buy, you can hold your buy or continue with your buy position. Just trail your stop loss. That's it. And if you're looking for a fresh position in the market, okay, again repeating, if you're looking for a fresh position in the market, considering the the ongoing trend of the market, it's better and safer for us to be on the buy side only. During the weekend, if anything changes, if any new news comes out, then that's a different story. But while recording the video, we don't have any news that will bring a trend reversal. So we are respecting the ongoing trend of the market and looking for trading opportunities. Okay, that way only. Okay, so after the market opening, if we see gold is coming down, or gold is coming down, then the best level to buy will be 3343. I know, okay, what you are thinking. Yes, 3343 is far away, but still you need to know that yes, we have a level on 3343 because market is full of surprises. If you see that there is a sudden drop in the market around 3343, okay, we have a very good support, but this is far away. We also have a good support around 3352, 3348. Okay, personally I feel 335248 is a better level to go for a buy. If market comes down, market takes support, we can definitely hit the buy button. If you're wondering what is the logic behind 3343 and 335248, then let me show you. So here also we are using the simple price action that we have been using for last couple of months. Nothing okay complicated. The previous resistance will be working as support. 50 is a all round number, that's why we are making it as a zone. See, we are considering the previous resistances, that's why we are expecting it to work as support, and we are expecting 3343 to provide support to the market because we are using FIBO. See, FIBO 61.8% retracement level, and to some extent we also have the previous resistance working as support. 335248 previous resistance working as support, FIBO 50% retracement level, and 3350 is also a round number psychological support. Then you can see we have an immediate support around 3359, 3357. Okay, 3359, 3357. Yes, this is also a support. Why are we considering 335957? You can see we have FIBO. Yes, we do have FIBO 38.2% retracement level, but also the previous resistance will be working as support. So these are the logics that we are using. Simple logic. Previous resistance working as support, and for additional confirmation we are using Fibonacci. Okay, so 59, 57, 52, 48 and 43, these are the three support levels on the chart of gold where we can look for a buy position, a support. Okay, if market comes down after market opening, same logic. Initially we will be going with 50 pips. If market shows further potential, we will just go for another 40 to 50 pips, but initially 50 pips will be our target. And how much should be the SL? Same 50 pips, means initially we are going with 1:1 risk to reward ratio. Okay, if market shows further potential, then we can go for 1:2 or 1:3. Okay, because if market shows deeper correction, because there is a possibility that okay, after bouncing for 50-60 pips, market may go down, then you will cry, oh my god, okay, I was in profit, now I'm in loss. So it's better to be realistic. Initially 50 pips. If market shows further potential, then we will increase our target. And usually we don't see much volume at the market opening. Okay, market जब open होता है बहुत ज़्यादा volume नहीं रहता है. Okay, if you see market behaving like a normal Monday market, there is not much volume, then you can also look for a support around 3368, 3366. Okay, already market has bounced once, but in case of low volume, okay, market won't be able to break it, because to break any level, volume is important. So you can expect a quick bounce around 336866 as well. So these are the levels where we can look for a buy if market comes down after the market opening. Okay, in case market doesn't come down, because see, there are two possibilities. Either the market will be down or the market will be up. So if you see the market is going up, okay, then we can look for a buy at breakout above 3380. Means after the market opening, if you see that dollar is falling, there is pressure on the chart of dollar, then obviously gold will be up. In that case, buying at breakout is the only solution. Buying at breakout is riskier. Okay, buying at breakout is riskier in comparison to buying at retracement. But if market doesn't come for retracement, we can't help it, isn't it? So 3380 is a level above which we can look for a buy position as well. But be careful, follow proper risk management, because the breakout can also become a false breakout, especially at the market opening. isn't it? Okay, so let's wait and watch. Okay, whether market goes up or market goes down. Okay, we need to plan our trades accordingly. But gold was bullish, so we need to respect the ongoing trend of the market, and there's a high chance that gold will continue the upside. Okay, and dollar will be under pressure next week as well. Okay, time will speak, and keep in touch with the news. Any news, okay, will also, okay, have an impact on the market. So nothing much to discuss. Okay, that's all from my side, my dear friends. Thank you so much. Bye bye, take care.